Hello traders, welcome to Investoo.com's introductory guide to stock indices. In this flash course, we are going to learn everything we need to know about stock indices, and we are going to learn the correct way to look at them and the correct way to trade them. So we are going to start by defining what a stock index is. And to do that, we are going to go to Investoo.com and we are going to look at the heat map of the S&P 500. Okay? The S&P 500, as well as any other stock index like the Nasdaq, the Dow Jones, the FTSE, the DAX, etc., is a basket of chosen stocks, and they are chosen for market size, liquidity, and industry grouping, among other factors. This means that this is going to represent the economy of a country. For example, the S&P 500 is representative or a benchmark of the US economy or the US stock market. The DAX is the benchmark or is of the German stock market. The CAC 40 is the benchmark of the French stock market. The FTSE 100 is the benchmark of the English um, stock market. So basically, when you are trading stock indices like the S&P 500, the FTSE, the CAC 40, etc., you are trading the stock market of that country. We chose to trade stock indices instead of stocks because of their volatility and because of their great risk to reward scenarios that you can pick on a daily basis and even better on a swing trade basis. But let's take a look at the S&P 500. You can see that we have the technology sector, the service sector, basic materials sector, biotechnology sector, industrial goods, utilities, consumer goods, and financials. Now, for example, if we look at the consumer goods, you can see that Apple is the biggest stock in that sector. And the reason is because Apple or has the largest market cap of any of those stocks in the consumer goods sector. Google, Facebook, Microsoft in the technology sector are the stocks that have the more or the higher market cap. Now, what I want you to realize is that if we have a big move in Google, that is going to have a lot more weight on the S&P 500 than a big move on QCOM or a big move on WDC, Western Digital Corporation. Even though this is a stock that has weight on the overall index, Google is going to be a much, much larger driver for a move of the S&P 500. So basically, not only we need to look at for technical locations to enter short or enter long on the S&P or any other indices, we also need to understand and we need to know what is going on with the big stocks in that index. For example, if you're planning to trade the S&P 500, you need to know if Apple has upcoming earnings or upcoming news that is going to make that stock very volatile, bringing a lot of volume, making a larger move, which will drive the S&P up or down. Now, on a regular basis, you don't have earnings announcements or big news announcements out of the stocks, and you can trade these stock indices from a technical point of view. But the volume is very important. But in this lesson, what is really important is understanding what the stock index is, what it represents, and what drives its price.